Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Megan Brantley, VP of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Friday.
Happy Friday to you. Pizza. We've got big opinions here in Chicago because we've got great pizza. Domino's, I don't know if you frequent that place, but, it seems like in an inflationary environment, Megan, that this would be right up everybody's alley where you can feed a family of four, for under $20, just due to their technology advances, their efficiencies across the board. But the stock's been pretty stagnant over the last 12 months. What kind of data do you guys have on this name?
Yeah, so whenever we look at Domino's and we look at the underlying data here, whenever you compare it versus its peers, I would say it's doing better versus its peers like a Papa John's, like a Pizza Hut. However, we're still seeing a bit of a just muted consumer response overall. I think that this lines up pretty well with how the stock has performed, but I think that you do make a good point. The reason that it's overperforming even some of its peers is because of the value that it gives to consumers in terms of affordability, but also how efficient it is. And part of that is related to its technology. But when we look at this, we see consumers who are saying, hey, I can order a pizza and feed my entire family for way less than it would cost me to go through McDonald's, and largely even less than it would cost to cook a meal at home. And so I think that that's a massive value proponent that Domino's brings to the table. But I included the Uber Eats and the DoorDash just so you could see that whenever, previously when we look at a company like Domino's, you're just comparing it versus its other, pizza delivery peers. And now you're comparing it to everything. And so I think that abundance of choice could be a top driver for consumers. So whenever we look at this company, just as a big picture, we like the things that it's doing with technology to become more efficient. We like that it's closing. I think it just announced earlier this month it's closing about 205 of its global locations that are underperforming. I think that that's smart. That's been a point of weakness on prior reports. But just in regard to overall consumer enthusiasm, a negative 2% year over year, especially whenever digital is a major driver of these sales, that to us looks a bit muted. So, we're heading into this with a pretty neutral outlook right now.
Megan, I consider Domino's Pizza the McDonald's of pizza, right? Because you can't argue with the price point. And though Tom and I are not good representatives for opinions on pizza because that we live in Chicago, you know who likes Domino's? Young people. Young kids love Domino's Pizza. And the fact that you can order it quickly at a low price point is really positive. Now, let's get to the business aspect. Their sales targets, they keep missing. Their top line growth seems to be slowing, yet they remain profitable and they do a good job. Why? I compare them a lot to Best Buy. They keep headcount down, they keep expenses down, and despite the revenue and other numbers, they remain really profitable. They manage their business really well. So they're good at appealing to young consumers with the price point, and they're good at running their business with expenses. So that's why, in my opinion, this is a pretty solid company, despite what Tom and I think about the quality of fast food pizza.
Yeah, I would agree with you. On a long-term perspective, this is a name that we like a lot because of the operational efficiencies that you hit on, because of how this company is leaning into AI. A lot of companies like to throw around AI like it's a buzzword, but this is a name that's actually implementing technology to make the entire process more efficient, from interactions with customers on the ordering side to the workflow side to actual delivery and the communication that you get along the way. I think that the company's app is another major driver of sales. I would say this is the brightest spot in the data that we look at because we actually see monthly active users rising on a year-over-year basis. And a lot of that is Domino's is really smart. They're using these promotions and special value opportunities. This is the company with its emergency pizza, and you've got to log into your app to get it. And so they're creating a very sticky environment where they can reach out and say, hey, it's Friday. Have you thought about dinner? Maybe you'd like to pick up a Domino's pizza. Here's a special. And so I think that that's really smart and really strategic in the long run. We just are still seeing potentially some signs of inefficiency that maybe they have to work out internationally, maybe a little bit of a sign of weakness on the consumer front, just especially in the last month. So we're cautious heading into this earnings report, but long term, especially if we see a pullback, we think that this name is a winner. This is a best of breed in its realm. And so certainly one that we'd be willing to bet on in the long run.
Yeah, so pretty neutral on it going into earnings. Yeah. A question I have for you, Megan, is, when you guys do, your analytics as far as the data that you guys see on this stuff, is Domino's highly rated as far as, I know it is probably against its competitors, but overall in that, it's not fast food, but in this type of restaurant, sector?
Yeah, this actually has one of the highest happiness scores whenever we look at overall consumer sentiment. So when people are talking about the company, they're putting out a really good product. But more recently, the biggest driver of happiness, I think, is that affordability and that perceived value. So that's really important long term, and that really helps to build trust and loyalty long term. And so that's why for us, sentiment tends to be the longest term indicator of future growth, and we see that doing well. We just don't like this near term little bit of pullback that we see on the digital front, and we know digital is so important. So we're sidelines for this earnings event, but we really do like this name long term.
All right, great stuff. Great data as always, Megan. Have a great weekend.
Thanks, guys. You too.
All right, that's Megan Brantley, VP of Research at LikeFolio. Kevin, I always, you mentioned